Bitcoin anchors the market, Socialfi sparks quietly. Are you chasing hype or noticing the subtle signals pointing to the next wave of real crypto opportunity? On December 29, 2025, I noticed smaller wallets actively engaging with Socialfi contracts, while whales stayed parked in BTC and ETH. DeFi TVL stayed solid, yet active users declined. It was déjà vu from earlier cycles. Retail experiments first, attention shifts before capital. Socialfi quietly started capturing identity and engagement metrics. Here's where the story gets juicy. Yield fatigue is spreading, staking rewards below 3% no longer excite users. Meanwhile, Socialfi sectors jumped over 3% in sentiment, showing engagement heat despite lower liquidity than DeFi. Where are you watching this from? Tokyo, Lagos, or Miami? Keep watching till the end, because I'll reveal the single critical metric signaling whether Socialfi will lead the next bull phase and where attention and capital are really flowing. Anyone who's been around crypto long enough knows this. Price levels mess with human psychology. And $90,000, that's not just another number, it's the final mental gate before six figures. According to Crypto News Market Update on December 29, 2025, Bitcoin pushed through 90K with rising volume, but without retail FOMO. In Motang, funding rates remained relatively neutral, a point also echoed by derivatives data tracked on major exchanges. I've lived through blow-off tops. This didn't feel like one. This felt like capital quietly repositioning. When Bitcoin moves calmly, who's already ahead of the curve? Institutions. And while everyone watched BTC candles, something else in the ecosystem started to stir. Ethereum didn't grab the loudest headlines, but honestly, that's what made it convincing. While Bitcoin surged, ETH quietly followed, holding above key support levels, according to Crypto News intraday data, December 29, 2025. No panic selling, no nasty liquidity wicks, just calm, controlled strength. And I always ask myself, when Ethereum stays this composed, what is the market really saying? Analysts at CoinDesk and on-chain researchers like Glassnode have repeatedly noted that ETH stability often signals deeper ecosystem confidence. This wasn't Bitcoin running solo, this was layer 1 alignment. And history shows when Bitcoin and ETH move together, capital doesn't sit still, it hunts narratives. That's exactly when Socialfi caught my eye.
Talked inside the Crypto News update from December 29, 2025, there was a detail most people scrolled past. Socialfi token saw a 3% jump in sentiment, while DeFi conversation barely moved. Small number, big signal. In crypto, signals rarely shout, they whisper. I've learned that lesson the hard way. When social layers quietly outperform, it usually means users are moving before traders. Reports from Messari and CoinDesk have highlighted how attention metrics now lead capital flows. This went beyond chasing yield, it was about owning attention. History keeps proving one thing, attention monetizes later. Here's the uncomfortable truth I can't ignore. Mexi's on-chain data, December 28, 29, 2025, shows DeFi TVL holding firm while active wallets quietly declined. That gap matters. It tells us capital remains, but users are disengaging. CoinDesk echoed this trend, noting stagnant user growth despite stable liquidity across major DeFi protocols. Messari analysts warned this often marked late-cycle behavior, money packed, narratives exhausted. When people get bored in crypto, they don't quit, they rotate. So where does attention flow next? Social layers. Platforms like Lens and Farcaster are heating up. Socialfi is noise-free, it's migration in motion. On December 29, 2025, Mexi's wallet flow data caught my attention, and honestly, it gave me déjà vu. Smaller wallets actively interacted with Socialfi contracts, while large wallets stayed parked in Bitcoin and Ethereum. Classic early cycle behavior. Retail experiments first, whales wait for confirmation. Glassnode and Coinmetrics have echoed this pattern in recent market structure reports, and Messari's Q4 Web3 outlook highlighted Socialfi as an emerging attention layer. I ignored these signals in 2021 and paid for it. This time I'm watching closely. When small wallets move before influencers tweet, it usually means the narrative hasn't been priced in yet.
I don't know about you, but yield fatigue has been real in 2025. Traditional APYs just stopped exciting people months ago. Even big staking yields like Ethereum's dropping below 3% signal a maturing market where simple interest isn't enough anymore. Meanwhile, as Socialfi sectors climbed over 3% on Dec 29, 2025, amid broader market growth, we saw engagement heat up despite lower liquidity compared to DeFi. That tells me people aren't dumb, they are bored. And bored crypto users always head to places where identity, reputation, and meaningful on-chain interaction actually matter again. This is where my conviction really locks in. Crypto has evolved beyond finance. It's now about attention. We're living in an attention economy. Socialfi sits at the crossroads where money meets identity. Think about it. Every major cycle had a social layer. Bitcoin Talk in the early days, Crypto Twitter in 2021, Discord shaping NFT culture. Socialfi didn't create this. It monetizes behavior that already existed. Recent insights from Messari, CoinDesk, and A16Z Crypto, December 2025, highlight rising engagement metrics preceding capital rotation. History keeps proving one thing. Markets reward attention before they reward capital. So ask yourself, where is attention moving right now? Let's be clear, Bitcoin breaking 90K does not compete with Socialfi, it unlocks it. When BTC enters price discovery, risk appetite expands. We've seen this play out repeatedly. Crypto News Cycle Analysis and CoinDesk Market Reports both note that alt narratives historically ignite after Bitcoin establishes confidence, not before. Even BlackRock's recent digital asset commentary points to Bitcoin acting as the macro liquidity signal for crypto markets. So ask yourself, when capital feels safe at the core, where does attention flow next? Bitcoin becomes the anchor, absorbing fear. Socialfi becomes the expression, capturing creativity, identity, and upside. That's not hype, that's pattern recognition backed by data.
This is the question most people quietly avoid. Are we overheated or just early? Look at the data. Funding rates remain muted. Volatility stays compressed. Retail Google search trends are climbing, but nowhere near euphoric levels. Crypto News volatility metrics from December 29, 2025 highlight a key detail. This rally lacks the disorder typical of cycle tops. CoinDesk and Glassnode echo the same signal, price strength without leverage excess. Even Bloomberg's digital assets desk notes how controlled moves often unsettle traders more than hype-driven spikes. Why? Because slow confidence builds conviction. Loud markets exhaust themselves. Quiet markets surprise you. When we overlay Bitcoin's price strength with Socialfi engagement growth using crypto news and Mexi data from December 2025, a clear pattern shows up. Socialfi activity surges after BTC stabilizes, not during wild swings. Why does this matter? When markets feel secure, users experiment more freely. Safety sparks creativity, creativity builds new platforms, and platforms eventually create tangible value. CoinDesk and the Blob highlight similar trends in emerging Web3 ecosystems, noting that innovation often follows market confidence. Could this mean we are witnessing the next wave of Socialfi growth forming right before our eyes? Everything points in that direction. Institutions rarely enter Socialfi first. They always wait for proof from the users. But here's the twist. They are the reason Bitcoin remains stable. Have you noticed this pattern? CoinDesk and Messari reports highlight how institutional flows act as a stabilizing force during major BTC rallies, while Aave and Lens protocol adoption data show retail leading cultural trends. Retail builds the narrative, sets the hype, and tests the platforms, while institutions validate price and confidence. I've watched this cycle repeat across years. Miss one side and you're mispositioned. So, are you following the culture or just the capital?
Sure, Socialfi can overinflate, and yes, engagement can be gamed. Mexi on-chain analytics from December 2025 show retention rates varying widely across new Socialfi wallets, a clear caution signal. But does volatility at this early stage mean failure? Not at all. Platforms like Lens Protocol and Steam have shown that initial turbulence often leads to deeper innovation. The real question is, are you noticing the change or assuming everything will stay the same? As CoinDesk and the Block report, these shifts mark exploration, experimentation, and adoption patterns. Risk lies in ignoring evolution, not in joining the movement. Honestly, everyone keeps pointing to 100K Bitcoin soon, like it's some inevitable headline. But while price chatter dominates, real builders are quietly stacking social layers and infrastructure across Web3. Look at the recent launch of AI-driven Socialfi platforms and venture capital flowing into the space. Projects like Meteor securing funding to expand its AI social PeFi ecosystem across global markets, and Rare 7 Capital's dedicated Socialfi fund backing early innovators. Those moves tell me something important. Builders ship before price pops, and attention is where value often follows. Right now, we're sitting at a defining moment in crypto. Bitcoin has held comfortably above $90,000 as of December 29, 2025, with major outlets reporting renewed upside and renewed confidence in the market structure. So here's the real question. If BTC stays north of that level while volatility refuses to spike, where does money go next? DeFi feels established but slowing. NFTs only move with narratives, and Socialfi is still an evolving frontier, drawing fresh curiosity but not yet mainstream hits. I've missed pivots before, but this one feels louder because the quiet right now is building pressure. What comes next could redefine how capital flows in 2026. What if the next crypto bull phase is driven less by yield farming and more by identity and connection? Look at recent Socialfi developments. Projects blending social networking with crypto rewards are gaining real traction as users crave ownership and monetization, not just yield. Platforms like Pulse have amassed millions of users by letting creators and communities earn on-chain value, a trend highlighted in the Web3 industry report, showing huge Socialfi engagement growth. Industry leaders at Dubai Web3 Week push decentralized identity as a core Web3 infrastructure, signaling broader adoption of identity-centric systems. So ask yourself, could Web3's identity layer become the interface where capital and culture truly circulate in the next cycle? And how soon will the mainstream notice? If this video resonates with you, click on the card above to watch more interesting videos. This is Blockchain Money.